June 2nd, 2026, and crypto just had one of its loudest days of the year. Quick shout out to today's sponsor Compete Token, the gaming crypto that actually has real games. Link in the description. Michael Saylor finally sold Bitcoin and the market completely lost its mind. Strategy offloaded 32 coins, about $2.5 million out of a $56 billion stack, and you'd think they liquidated the whole treasury. The stock dropped 9% on Tuesday. That's down 15% in 5 trading days, all because the king of never sell finally clicked the sell button. Meanwhile, Strive, the smaller debt-free rival, looked at the chaos and basically said, "Hold my beer." They announced a $4.2 billion offering, added 2,500 Bitcoin to their stack, and now hold 19,000 coins with zero debt. While Strategy is asking shareholders to vote on dividend payment dates, Strive just shipped a 13% daily dividend launching June 16th. Bitcoin just got crushed to its lowest price in almost 2 months. We're sitting at $67,000 after a 5.5% drop in one session. That's 12% down on the week and 46% off the all-time high. Spot Bitcoin ETFs bled $2.4 billion in May alone, the worst monthly outflow of the year, and the 11-day outflow streak is still running. Traders flipped fast. The Myriad prediction market now prices a 53% chance Bitcoin dumps to 55,000 before bouncing back to 84. On Monday, that same crowd was 62% bullish. That's how fast vibes break in this market. The RSI is at 22, screaming oversold, but a death cross-confirmed downtrend doesn't really care about your indicators. Bernie Sanders and Elizabeth Warren just sent a 14-page letter begging the Labor Department to keep Bitcoin out of your 401k. They're worried about a $10 trillion retirement market getting exposed to volatile assets. Meanwhile, traditional finance has spent 50 years exposing it to fees, lockups, and target date funds that lose to inflation. The kicker is, they argue the rule would help Trump's family by giving the Trump meme coin and World Liberty Financial Token a bigger market. That part is actually a fair point, but the answer isn't banning workers from putting their own retirement money into whatever they want. It's about time someone in Washington trusts adults with their own savings. Tom Lee just called Ethereum at $250,000. Yes, that's a 10 times move from where it sits right now. And yes, he means it. His thesis, corporate validators take over network control, ETH becomes the trust layer for global finance, and the supply pressure does the rest. Now, Tom Lee has been bullish on basically everything that's gone up over the last decade, and while Strategy was selling Bitcoin, Lee's Bitmine Treasury and Strive bought a combined $237 million worth of digital assets. He's putting his investors' money where his mouth is. 250 grand sounds insane right now, until you remember people called him crazy at 20 grand and 40 grand too. Coinbase just backed Athena ahead of a savings product launch for the exchange's 100 million users. Translation: synthetic stablecoin yields are about to hit the most mainstream retail audience in crypto. This is massive. Athena's USDA is one of the most debated dollar peg assets in the space, and now it's getting the Coinbase stamp of approval pointed at 100 million wallets. Either this is the moment synthetic dollars finally go mass market, or it's the spiciest yield product Coinbase has ever pushed to your grandma. Either way, billions of dollars are about to move. Franklin Templeton, yes, the $1.5 trillion legacy asset manager, just teamed up with MoonPay so big investors can swap stablecoins for yield around the clock. That's traditional finance finally admitting that markets shouldn't close at 4 p.m. on a Friday. Crypto has been screaming 24/7 settlement for a decade and getting laughed at by Wall Street the whole time. Now Wall Street is begging for it. Funny how that works. New York's crypto regulator just signed a transatlantic pact with the European Union to police the $314 billion stablecoin market. 22 pages, full information sharing, joint emergency response if anything depegs in either direction. Here's the read. Stablecoins got so big that 2 of the strictest regulators on the planet decided they need to coordinate in real time. That's not bearish. That's the system finally admitting these things matter. Dollar-pegged tokens won the war, and now the regulators are giving up on chasing them and partnering up instead. Galaxy Digital just dropped $10 million into institutional prediction markets, executing the trade through Arca. Big money is officially treating polymarket-style markets as real financial infrastructure. 2 years ago, prediction markets were that weird website Vitalik likes. Today, they're a Galaxy Digital asset class. The information edge is real. These markets sniff out election outcomes, Fed cuts, and corporate news faster than CNBC can read a teleprompter. Hyperliquid is beating Ethereum in daily trading volume, yes, the entire Ethereum chain, and Falcon X says big money is rotating out of Bitcoin straight into it. Oh, and a separate report just showed Hyperliquid predicted 80% of a recent oil market move before traditional exchanges even opened. A perp dex out trading Ethereum and front-running the oil market. If you told me that in 2022, I would have laughed. Now it's just Tuesday. The on-chain finance flywheel is spinning so fast that the legacy guys can't even see what's eating them. Andrew Yang's mobile carrier Noble just acquired Helium Mobile, the crypto-powered cell service running on Solana with 139,000 citizen-run hotspots, 2.6 million daily users, real revenue, and now a presidential candidate-backed parent company. This is the part of crypto that doesn't get enough airtime. A decentralized cellular network, owned by random people running tiny boxes in their windows, got big enough that AT&T and Telefonica are paying to use it. And now Andrew Yang's the new boss. Quietly, crypto infrastructure is eating the real world. Quick reminder to check out today's sponsor Compete Token, link in the description. That's the news. See you tomorrow.